Hi, Dean Jenkins with Follow Me Trades here for the market update for the week of July 20th coming up. So I wanted to look at the longer term trend for just a moment. So this is a weekly chart of the Dow Industrial Average, and you can see we've been in this bull market for over 6 years now. The market's gone nearly straight up. You can see the previous the previous uptrend. This was the recovery from the dot-com bust that started back in '03. We went up to the end of '07, and then, the crash that we all remember pretty significantly, um, '07, '08 into '09. So I just wanted to show this chart to give some context of where we're at, because we're going to zoom in and talk about, what's going on currently right here and do some technical analysis. But we're at the end of this long trend. It won't last forever. It may go on and make a few more minor highs, but at some point it's going to correct again down into this zone here, and we want to be ready for that. I wanted to show this chart just to give some context and a bit of education. So this is a chart of the S&P 500, and it's the same pattern as the Dow. And so that uptrend that started in '03, trends are defined by a series of higher highs, higher lows, higher highs, higher lows. And that trend is over when that pattern is broken and we put in a lower high, we break through the previous low, and at that point, when we break through this low and make this sequence then of what's called lower highs, lower lows, that's the definition of a bear trend. And that trend, we can point to a specific day, January 18th, 2008, when the bullish trend was over and a bearish trend had been confirmed. And in 2009, at the end of the decline, same rules apply. We had lower lows, lower highs, all being put in, and then that pattern was broke. And here on July 24th of 2009, we broke through a previous higher low and established a pattern going up. And this is the trend we're in now. It started back on July 24th, 2009, and it's gone up like 277%. So these price patterns that I'm covering on the charts, they matter. They absolutely tell a story of what's going on in the market. So let's take a look and zoom in on the current price pattern. So now I've zoomed in, and this is a daily chart of the Dow Industrials. And if you remember from my last updates, we were watching this level real close. We came down and we broke through this level. And I said that was a warning, not that it told us for sure that the bear market was underway, but it was a warning. And this low here, I'm saying if this February 2nd low is taken out, and the pattern of the price when that gets taken out meets the guidelines, then I'm prepared to say that the bear market has started. What we've got here is a sequence of new lows, lower highs, lower lows, and so far we have not taken this level out. So I'm really watching right here and right here. So if prices go up, continue to go up above this level, then that pattern for a downtrend will have been broken, and it's probably not happening, and we'll probably do something like this and go on to make some new highs. Probably not real significant. We're at the end of this trend. That's one thing that could happen. I think the more likely scenario is it will stall here. It will stall here. It will go down, do this, and go down and make a new low. And if it does that, if the pattern looks like this, even before we get down to this level, we're in a bear market. That's going to be pretty definitive. So we'll keep updating it. We'll keep watching it. The news is interesting and exciting. Lots of news about what's going on in Greece. Apparently, the European Commission is going to give them a bridge loan, bail them out. China is really interesting, and I'm surprised there's not more news about what's going on in China. The pretty sharp decline in the stock market in China. We talked about that. The Chinese government is doing some pretty unprecedented stuff that would not happen in the United States. They're doing a lot to prop up the stock market. Still, about 50% of the stocks in the Chinese market are not trading. The government has said don't trade those, and the government's loaning money to companies to buy back their own shares. They've changed the rules so that insurance companies and pension plans can buy stocks. Um, the government is intervening in the Chinese market again in a way that the U.S. government would not, and they're kind of propping it up. So will that work? What happens when they start trading all that stuff? China is a big part of the global economy, and that could have a big effect here. So we watch the news, and really the news draws our attention to charts, in particular market sectors. I don't trade based on news. I let the news draw my attention, and then I trade based on the realities of the price on the charts in front of me. And right now, the reality on the price on the chart in front of me says we're still probably 50-50 whether we've got more highs or whether the bear market is starting. But as this plays out, we will have some facts, some reality to make our decisions based on. So stay tuned. Thanks.